welcome to this series of fireside chats to talk about all things payments with a range of CGI's clients. I'm your host, Gareth Lodge, Senior Analyst at Celent, and I'm delighted to be joined today by Christof Hofmann from Deutsche Bank. Christof, thank you for joining us. Could we start by you giving us a little introduction to yourself and, of course, a little bit about Deutsche Bank? I know Deutsche Bank is well known by everybody, but it's also a very big organisation.
Hi, Gareth. Thanks for having me. As you said, Christof Hofmann, my name. I am heading Corporate and Payment Solutions at Deutsche Bank. Corporate and Payment Solutions is part of the corporate bank, so where we serve our corporate clients, as the name says, mostly, and some institutionals. And that is part then of the cash management organization. Very clearly work a lot with treasurers, corporates, etc., fintechs, PSPs to provide them with leading solutions. My role specifically, I am responsible for all our global cash sales specialists, and I'm as well responsible for payments as a product.
So it sounds like payments is a very important part of Deutsche Bank's business. I presume it's an area of strategic importance then. So how do you see payments as a bank?
Well, really, we are one of the major cash management banks globally, right, and have always been a strong payments bank. And I would say that has definitely even increased over the last couple of years, right? We've just recently announced that we launched a new business line, our merchant solutions business, where we cater more for marketplace solutions, where we have more payment acceptance solutions, etc. We're one of the major provider for fintechs, right, who use us as their banking partner for their needs again to serve their clients. And clearly we have a strong retail client base as well, where we provide innovative solutions and want to be the leading bank in that regard to our clients in Germany and worldwide.
So given payments are so critical to your bank, how do you view the technology partners? Are they just a vendor or something more like a partner? Indeed, what makes a good provider of technology for you?
Well, it depends a bit, right? So we as Deutsche Bank, we keep a lot of our technology as well in-house, especially in areas where we see really our core competences, etc. But we work as well with vendors and partners in different fields, right? For example, we work with vendors in our core payments engines who help us then really work hand in hand with our technology teams internally, right, to provide new solutions to our clients, to really bring the product and solutions which our sales and product specialists innovate and develop jointly with our clients really to life into market. And in that regard, clearly, the external parties are much more partners than vendors, right? Even if it's formally a vendor relationship, in reality, it's long-standing partnerships with trusted providers where we work hand in hand and where we, have a true partnership in terms of how we develop product and solutions, where ideas come from both sides, etc.
And so I understand CGI are one of those long-standing partners that you have.
Yes, indeed. CGI is one of the partners we work with since a long time already in some areas of payment where they help us to really provide our leading solutions to the market.
So perhaps changing gears a little bit now and talking about ISO 222 and that migration, is a big change for the industry, particularly those markets outside of Europe where perhaps they don't have as much experience or even any experience of it. Your website has some really great videos. It's been a good resource for the industry generally explaining it, and particularly to those outside of Europe. We're pointing out to them explicitly. So given that, I think some of those banks, say in the US, for example, think, given SEPA, and that how long we've been using it, the migration should be relatively easy or easier. Do you feel that's true? I suspect I know the answer to this.
So first, compliment to indeed my colleagues who run this website, which is really a source of information for the industry, for other banks, for corporates, etc. And I think there are some amazing small snippets there which are worthwhile for everybody to visit. Talking about the ISO and migration and the challenges, right? And I think, again, we need to differentiate. Many of the market infrastructures are moving to ISO in Europe, Euro 1, Target 2, but then as well CHAPS and in the UK over time. So it's a global trend, right? But it's as well in the many-to-many space. So the SWIFT infrastructure is moving to ISO as well. And that is as well due to kick off in 2022. To your question, is it easy for European banks or easier? Clearly, it helps that we know ISO as a format from SEPA, etc., right? But I think that's the smallest part. It helps to know the format, but if you think the classical clearing based on SEPA is so standardized, so much easier than it is if you talk about correspondent banking, Target 2, etc. There are so many more nuances to ensure that you have all the intermediary parties captured in the right way, that you have structured address information, all those details, right? So I think the challenge is not necessarily in understanding the format, but ensuring that your end-to-end infrastructure, and that includes then the reporting for the corporates, etc., is really fit for purpose and allows you to really support ISO end-to-end, right? In terms of discussion in the industry, I find it really interesting, right? There's no bank conference where ISO as this big market project and market infrastructure is not mentioned. But on the corporate side, if you talk to your corporate clients, there's very little awareness still, which is interesting. Clearly, that has to do with the fact that the corporate formats don't necessarily need to change straight away, right? Because things like the old legacy MT101 and the MT940 are still existing. But if you think about it long term, right, there will be data truncation. Corporates will lose information in the MT940, which is available in the clearing, because the bottleneck of the information, which always used to be in the clearing on the interbank space, is suddenly moving to the format clients choose to use. And that's why it will impact them much more. And that's why we really encourage all of our corporate clients as well to move towards ISO rather earlier than later, and use that for reporting, for statements, but as well for payment initiation.
That corporate point is a really good thing to have picked up on. So we talk to many clients in many parts of the world, including the corporates, and how many of them haven't been told by the banks that this is even happening. So I think it's quite curious in one of our recent surveys where we asked banks where they were in their migration plans and how they'd approached it. Many of them had said they've done the bare minimum, because 2/3 of banks, and this was almost the same across every single region, is they didn't see the benefits to their corporate clients. And I do feel there's something of a chicken and egg here. If you don't tell the corporate clients that this is happening, how do you know that they're not going to benefit? And if you don't do it, how will they benefit? So I do feel there's going to be more work on this down the road, rather than this is a done once in the next couple of years approach to this. And I think that creates all sorts of issues with your correspondent banks, for example, knowing where they are on their journey and how they've approached this migration.
And that's right. If you think about correspondent banks, and Deutsche being one of the largest correspondent banks, right, clearly that is in the center of the attention moving to ISO. Even on the bank side, right, smaller community banks somewhere in the US or wherever, right, doesn't matter. They give this clearly a different priority because they don't run it as a business, the cross-border payments business in itself, right? But ultimately, it has so many reasons to move to ISO, right? It's just benefiting for the corporate clients, but it's as well compliance risks on the bank side, right? If your data is truncated somewhere because you relied that there is a transition period with SWIFT till 2025, it still means you see incomplete information for your compliance checks. So there are many, many reasons to take that serious, look at it early, and move swiftly to the new format, which is sort of richer in data. And by the way, helps as well to make the whole cross-border payment flow more STP easier, right? One example, if you, for example, today you have no structured address information in many cases. So if somebody lives in Cuba Avenue, the sanction screening picks up on it and you need to first release it again, right? In the future, if it's clear Cuba is only a problem if it's in the country tag and not in the street tag, it's not an issue anymore. So those things will help the industry as well.
And the ability to store all the 222 messages, whether it's real-time, Swift, high value, in similar data stores to be able to get that view across the payment types, across the clients, and get better, richer data as well. I think that's a promise that may be down the line, but I think is alone one of the reasons why banks should be considering this.
I agree.
So many believe that real-time payments are the future of payments. They won't replace everything, so they're not the card killer, perhaps that some talk about, but they will become ubiquitous. And cross-border real-time payments are already starting to emerge. So in that future state of real-time being so prevalent, do you agree? And if so, where are you as a bank on your journey to real-time payments?
So I clearly fully agree to that one. Real-time payments are a key part of our strategy as well and very important. Even though we clearly see differences in the pickup, right, how it's used. We see differences in markets with, for example, Asia in many, not all countries, but in many countries being a bit more advanced than Americas or Europe. We see as well difference in the type of use, right? At the moment, if you think about the corporate universe, corporates who are interested typically are interested in it because they want to change their own client experience, right? By having faster payout of refunds, etc., right? So I think the interest in use replacing, for example, SEPA completely by SEPA Instant and doing salary runs, etc., that way, some consider it, but it's not yet mature. Which has as well to do, not the salary runs, but in generally, that there is amount limits are still in place, right? In Europe, they're pretty high with SEPA, with 100,000 euros per payment, right? But still, it makes clear it cannot not yet replace each and every SEPA payment, right? But the trend is clearly there. And I even think that the real-time payment in itself for a bank to offer it is no longer a differentiator, right? That is something most banks can do already or are on the way of doing it. Maybe not in each country, but in general, right? And it's really a big trend. What is the differentiator is then really the end-to-end service and proposition you can offer to your clients. So for example, are you able to offer your clients the ability to send you a payment file and execute everything as real-time payment where you can reach a party via real-time payment and revert everything else to a classical SEPA payment where that is not possible, instead of rejecting it to the client and then giving one file for reconciliation back? Are you able to offer API connectivity to really initiate payments via API directly out of a mobile phone application or whatever? Those are the differentiators really in real-time payments, more than the participation in the clearing itself.
Absolutely. And picking up on that end-to-end experience, I think banks who haven't started their real-time journey just think of it as faster ACH rather than the other challenges that come with it, the uptime, the availability, that anything and everything that touches the payment also has to be available 24/7 and operate in the single message. That, I imagine, has been a learning curve, not just for your bank, for every bank around moving away from batch systems to more modern systems.
Yeah. I think it's that all banks are around for a long time, and historically, infrastructure in the past was at least built. Very often it is batch-oriented because that's how the clearings work, with opening hours of a clearing and 5 days a week. simplifying a bit. It's clearly not everywhere overall the case. But moving from there to a 24/7 real-time availability, which is not batch-oriented in the payment processing, but really single payment-oriented, and having the speed requirement within a few seconds. Many clearings have cut-off times of 10 seconds or so, but in reality, you need to be much faster for the client experience. It needs to be done in 1-2 seconds, right? That is clearly something which is a big, big change for banks' infrastructure. And it's important. It's not only a change for the bank's payment system, right? You need to have limit checks supporting that. You need to be able to book on the account or on the ledger in that way all the time. And in particular, you need to be as well able to do your compliance checks, right? So that means you have a transaction which lasts end-to-end 2 seconds, and you might need to be able to do sanction screening on both sides. So the originator bank and the beneficiary bank do a sanctions check while you process the transaction. So it clearly is a huge, huge change to banks' infrastructure, but something which anyway had to happen, right, to move to the modern world, to be honest.
Indeed. And I think I would fully agree with all of that. And what we're advising many of our clients is, what we have today is perhaps the starting point or version 1.0, and it's going to both mature and get more complex over time as well, with overlay services and combining with APIs and things like that. I think the one that most people are talking about at the moment is request to pay. Do you see a demand for that in the short term and ways for banks to differentiate themselves in that?
So with request to pay, there, first of all, different ways how this comes in different shapes and forms, right? So if you think about markets like India, where the instant payment is UPI, that's a feature of the instant payment system, right? If you look at Europe, until June this year, it was only available via open banking, right? Where we as Deutsche Bank have launched this with solutions, are live with our clients, etc. Now in June, it went live in Europe as well with EBA clearing as a clearing supported mechanism, which has some different flavors to it. So in my view, potential of request to pay is huge. And sometimes we forget there are established request to pay methods existing, right? If you think about Ideal in the Netherlands, that is a request to pay mechanism. It's the most popular payment method in e-commerce in the Netherlands. It was just not branded request to pay. It was clearly a more community solution, etc., but it's hugely successful. And now, in particular with the combination with instant payments, right? That is really a great match because you can create complete new client experiences, which more can even replace direct debit-like flows in this context. You can allow clients to pay by link abilities. You can use it jointly with barcodes. It's just the flexibility it offers and the amount of use cases it can support are just huge, right? As well in e-commerce, to take some of the higher credit card costs which some of our clients face out of the system, right, and replace it by a different payment method. With instant payments, you have finality straight away. Sorry, I could go on and on and on. But so I think the opportunity is huge. We need to acknowledge as well in Europe, outside some of the singular solutions like Ideal, it still needs to mature a bit, but we are getting there, and those account-based solutions are clearly the future to have them fully integrated with the account.
Couldn't agree more. And so I think now we look to the future, when the pace of change over the last 10 years or so has accelerated. And in one of our recent surveys, 92% of all banks believe it's going to accelerate further over the next 5 to 7 years. So as somebody said, you ain't seen nothing yet. So I think there's not just new demands though, but also new possibilities with the pace of change in technology as well, and it being adopted with by the banks as well. And two things really seem to be standing out at the moment. One is APIs, and I think we've moved past the two mandated by PSD2s to actually API stores and offering value to corporate clients in particular, and the adoption of cloud, which whilst I first wrote my first report on payments using cloud 15 years ago, still isn't quite there yet, but it feels like we're on that cusp. So I'm curious as to what your thoughts are, the next big things, and particularly APIs and cloud.
Maybe first, payments clearly moved from what it was considered a pretty boring and stable industry in the past to something which is hugely dynamic, what is going on in the market. It's even difficult to follow sometimes, right? There's so much movement, new innovation, new players, etc. So really a very interesting field. In particular, as well, payments has moved to the center of the client's experience, right? So many more companies and startups are thinking about how they can optimize this experience of payments. Talking about API first, right? I wouldn't even say anymore API is the future, right? In many places, API is already there and is already an established solution, but not everywhere. So the traditional corporate use cases, I think, still need to mature, right? There needs to be a clear demand where the API is a value add. Just replacing your existing channels by an API channel. Treasuries are typically driven by business cases, right? So why should I if I get no incremental benefit? That needs to be combined with something which really adds value. So, for example, if you have a real-time balance API, if you have the ability to track and trace your payments via an API and have it fully integrated in your ERP or TMS system, or if you use the API to do certain activities which you previously did in a portal somewhere, fully integrated in your own system infrastructure, right? That is powerful. Or as well, if you think about different ecosystems in the whole startup, fintech area, right? Contextual banking, embedding financial services into a user experience of a private individual somewhere, right? To really fully embed this and have it integrated seamless. For that, APIs are, there's no other solution than API, or for initiating instant payments really on the go. So you're on the phone with the service person of a company and they say, yes, we refund you, and you press a button, right? You don't want to wait for the next batch file to be submitted. So in a way, API, I think the use cases are clear. In some areas, already heavy demand and usage. Again, a bit different by region. But as well, many areas where I don't think API will replace all the existing host-to-host, Swift, ABIX connectivity in the near future, because people will only change to more endpoints if there's a value, which needs to be either a business case or something else, right? Otherwise, it's a tough sell internally as well. And in fact, it just opens another door to the outside world. And when it comes to payments, you want to limit the number of doors to reduce cyber risk, etc., right? So that's on the APIs. Clearly, the future, without any question, and many use cases heavily rely on it. Thinking about cloud, on the other hand, if I think about it as a technologist, right, even though I'm not one, then cloud is clearly the future, right? Because it gives you scalability, it gives you resilience, it gives you easier integration, etc. From a client's perspective, now our clients, most of them don't care whether our payment infrastructure is run on the cloud or not, because it doesn't change their user experience. It depends how we facilitate, right? Still, being cloud native and moving more applications, processes to the cloud is key, and especially for modern scalable to have modern scalable infrastructure. And at the same time, it helps you as well to then offer integration points with partners, right? Create really this contextual banking use cases, which really help to improve the client experience. So cloud, clearly, yes, absolutely. And we just as well, not just, it's a while ago already, launched a partnership with Google on that, for example. But it depends who you ask, because our corporate clients, that's not the question they ask us very often.
Indeed. And I think that's certainly the case almost within the bank as well. They want to know not how it's done, but how much it costs and how many savings, and the more practical, pragmatic things, particularly the risk team, which I think has been often the challenge, because unlike arguably other parts of the bank, if you have a bit of an hour's downtime on your mobile banking app for consumers, not good news. If you have an hour's downtime on your core payment system, that has systemic issues for the country potentially, for a bank your size. And I hope I haven't cursed anybody. So I think there's a maturity curve in terms of not just the technology, but the comfort and the controls around that as well.
As said, the cloud is clearly the future. That's where we go. That's where other banks go. That's where payments will go. It's just a matter of the right timing to move the right applications to the cloud.
And I think one of the promises of cloud is that agility to respond to this changing world. We hear about Cybos 3 years ago. Central bank digital currencies wouldn't have passed many people's lips. Today, it's front and center, and many countries have launched or just talking about launching such things. So I think the pace of change is such that it's not just the abilities to change, it's the speed at which you can change as well. So hopefully cloud will help deliver that.
I absolutely. And where, for example, it's a big topic as well, right? Again, not in the core payments area, but in terms of how we provide additional services to our clients, right? Very often some of the services which are more technology oriented there, right? In which work then in close integration, collaboration with TMS and ERP providers, right? Those are often cloud native then because it's the best way to deploy.
That's been absolutely fascinating, Christof. Thank you ever so much for your time and your insights, and we hope to speak to you again soon.
Thank you very much, Gareth. It's been a pleasure, and hope to see you soon.